Right, so goal schmoles. We do have an agenda today. It's a small agenda. It is group therapy. This will be more interactive than most group therapies that we've done. As I said before, one of the things about group therapies is, we don't want to keep giving you the impression that there's always something new to learn. Do you know that there's always, you've got to have the next group therapy or you won't be profitable, and the next group therapy or you won't be profitable, and do that for years, because it really puts you on a downer, in my opinion. Okay, so what we're going to talk about today, we're going to talk about goals and typical trader and how we're going to structure the future group therapies. Now, I use the term goal schmoles. I always like to use a new word where I can. I've already used the word soiree today, which I was quite happy about. But I like the word schmoll because it really does explain goals, trading goals, to a T. So a schmoll is a person who's always ruining things for the rest of the group, or being a downer, someone who no one wants to be around. And that kind of describes a lot of trading goals I've seen people assign themselves, during my time working with all of these traders. Right. And some of these goals are probably goals that you've had yourself. So first of all, let's just go through them one by one. Have any of you had gone through a period of having a goal of making a certain amount of profit each day? Aloha, yes. And let me just bring this, around. Well, I won't bring the chair. So yes. And what were the results of having that? What did that do for your trading? Jan Pitch, you still have one. Did anybody have not so good? No. Okay. Right. So the idea of making $1,000 a day is an interesting idea, and it's based around the fact that we come from a background of usually employment or self-employment. There's a lot of self-employed people who started a business and they owned the business, and then the business started to own them. and then they look to trading. It's very difficult if you're a business owner to look to trading, because your business is by the time you do that, the business has taken you. So you look at what you earn now and you say, well, that's how much I need to earn a day. And the problem with it is some days there's not really that, you don't have to make money every day, but that's kind of like, when you say something like that, Stefan, you don't have to make money every day, it almost sounds like a cliche, right? It almost sounds like, oh yeah, everybody says you don't have to make money every day. But and I'm not disagreeing with you, Stefan, at all, because you're right. But the thing is, if you have a goal of making $1,000 a day, and there's a day where there isn't $1,000 to be made, you're going to keep trying to make money when there's no money on the table, right? So an average of $1,000 a day, that might be a better way to do things. Now, Thomas is saying, and this is something we'll get to later, is my only goal is to follow my processes and take trades and follow my processes. And you'll know that this isn't in the slide here, goals that bite. And I've put a golfer's delight here because a lot of this, you'll find a lot of people who play golf have very, very similar experiences. I'm not a golfer myself. I'm not a fan of golf at all, but I've read some books on golf, and the way the pressure of you're going to make a putt that you can make every day, and you can make that putt every day out with your friends, and then all of a sudden you're in a competition scenario. It's the last putt of the match. If you get the putt down, you win $1 million and you fluff it, right? And that's where golf comes into this kind of equation. It's like you get close to making your $1,000 a day, so you might just be nearly making your $1,000 a day, and you've made your $990 a day. And if you are so tired to making that extra $10, that's when people basically lose the whole $1,000, right? Now, the other goal that I've had, and I don't know, we might not have anybody here doing this. Have any of you ever left your job for a period to try to learn to trade? Yes, Jake. And Jake, are you still in that period? Yes, right. So I'm not going to, a long time ago, blew that up, quick 14 months ago. Okay. So what happens, especially if you've got a partner, sometimes you can get away with convincing your partner that, you know, this is a good thing, I'm into trading, and they give you your consent, and you've still got one set of income coming in, albeit a lower one. But again, we had a guy, I think we had a guy on here a few months ago, I think it's last year, or it may have been 2 years ago. He took that 1 year sabbatical, and it ended up in a breakup of the relationship, because 1 year turned into 2 years, and that turned into almost an infinite amount of time. And one of the problems with this goal is it's great. Let's say you've got 10 months off. It's great when you're in month 1 to 5, but once you get over month 5, now you're on the back foot. Now it's like, okay, well, now how much progress have I made in the first 5 months, or am I still where I was 5 months ago? And a lot of people, they get to month 5 and they're still in exactly the same place they were at month 1. And so when you're in that situation, now the pressure to perform it's incredidible. You know, I met one guy that I met once. He might not like me for sharing this story, but he was 70 years old and he had a 14-year-old daughter, and he was going to run out of money in 6 months' time. And he wanted to use trading as a vehicle for making up for the fact his pension was going to run out in 6 months. And, you know, it was at the time I at the time, it's very, very difficult to turn somebody down when in that situation, but it is a situation where your chances of success are almost zero because of the pressure that you're under to actually get to where you need to go. Now, the next two I find a bit unfair, right? So the next two are almost the opposite. One is being close to a failure. So we've got different ways to fail now, haven't we? We can fail on a sim account, we can fail on a live account, or we can fail on one of these trader tryout accounts with somebody like Top Step, Earn to Trade, TikTok, Apex, someone like that. And they all give us a chance to fail, right? And when you get closer to that failure limit, it almost seems like a magnet to pull you into failure. So I presume you've all been, the people here have been in that situation as well. When you're close to failure, it almost pulls you in. It's very, very difficult to get away from being close to failure. But the other one that really gets me is being close to success. So success, sorry. So how many here have been close to getting a funding account, but then just blown it up? Yeah, me. Yes. Right. Now, I want to ask a question, because the one thing I think that's going on here is when you get close to a failure or a loss limit, or when you get close to a success target, right? What happens is you're that close that you want to get over the line. You want to get over the line, or you're that close to failing that you want to swing for the fences. And so your rules go out of the system. So you guys that like either failed for being too close to a failure loss limit or a success limit, did your rules go out of the window a little bit? All the time. Yeah. Close to failure 3 times in the last month. Happened today. Yeah. Okay. Yeah, and some people say never like to use a funding account. But again, some success targets that exist in the prop world as well. Like, you know, if you make this much money on sim for this longer period, then you get your first funded account. And again, people get so very close to this, right? And then they fail. And we're going to go through some solutions to this as well. Another goal that bites, and this is our fault a little bit. We've got this trade calendar. People trying to get every day green in a month, just have a month where every day is a winner. And if you try to do that, and I know you can't see the answers yet. I got a lol, I got some yes, we got some people doing that as well. Trying to turn the losing day into a winning day. It is a futile goal. It is a pointless goal because some days there's just not any money to be made. And the problem is if you try and get, what I've seen is people that have had really good months. And on that last day where they're trying to, or on that day where they're trying to get the green day, but they're looking to make a red day, they lose the whole month. Yeah. I mean, there's a guy here who's doing a challenge. The goal was to make 20,000. He made 19,820 euros and then blew it up. Right now, Jose, when you blew it up, what happened? Because you only needed to make another 80 euros. Well, what is it that happened? See if we can get a reply from Jose. Did your rules just go out of the window to try and make that $80, 80 euros? Yeah, he lost his rules. So what Tom's saying, over the years he's paid his dues, spent time. End result, he's gun shy about re-entering the market. So he's got a feel of pulling the trigger. Yeah, you do need to find a rational way to get out of that, and we can talk about that in a second. Holding on to a price because it feels like the first or the last price movement before stopping. Yeah, you think the market's not going to offer you any more opportunity. Well, if you looked at the S&P today, there was plenty of movement on there. Trying to get a losing day into a winning day. Well, I've always said my best days have always been when my first trade is a loser, but then I'm not talking about a $20,000 loser. I'm talking about, a couple of $100 loser, a little loser, because I never put a big risk on anyway. I'm quite risk averse. But trying to get a losing day into a winning day, some days it's just a losing day because there's not much opportunity on there for the way you trade. But, considering that the being close to failure and being close to success both give you this bite, this reaction that sees you just throw your rules at the table. It's like as if trading is a total, well, could have put a different word there. It's like trading is like a total poop magnet. Now, none of this is technique related, right? But you do need a decent technique to start with, right? So I think we can all agree you need to be trading a decent technique to start with. But one of the catch-22 situations is that whatever technique you start with, you're going to be bad at it on day one. And I know we've talked about this over and over and over again, and I'm sorry to keep repeating it. But whatever you pick, you're going to be bad at it at the start. And that gives you a bit of a catch-22 situation because everybody tells you that, to know if your trading method works, you have to give it so many trades or so many months or so many yada, yada, yada. But like, if you need to give it a method 6 months, how many, and you've got a bad method, you've got a technique that just doesn't work, you picked it out of a 50-year-old trading book and you give that 6 months, there's a certain amount, there's only a limited amount of 6 months you can do before you'll be dead and buried and in the ground, right? A catch-22 situation is when you have kind of, well, the catch-22 is like, I'll just restate the example. It's actually a movie, Catch-22. And it's like when you've got like two opposing things and you can't actually get out, you can't actually win. So the two opposing things are, you don't know the technique works unless you've put enough time into it. but then you haven't got enough time to try all of the techniques out there, right? So you don't know the technique works, but then how much time can you put into it, right? So what goals can you have? So we're going to talk about what goals you can actually have at the point you pick up a technique, right? So your first goal, I think, should be some measure of actual improvement, right? So you don't have to test something for 6 months to see if it works, but you can test something for 2, 3, 4 weeks to see if you improve at it, right? I mean, it's not a guarantee that it works, but it's a guarantee that you're actually improving and that there's some merit in it, right? So instead of saying, right, I'm going to try this and stick with it for 6 months, which nobody can really do, the first thing you need to look for when you look at a technique is, does this technique provide me with some method of actually saying, I'm getting better at this, right? Now, another goal that you can have when you look at a technique is actually a goal of seeing something recur with your own eyes. So let's say you are using a moving average crossover, right? Which we know probably isn't the best technique in the world, where just 2 lines on a chart cross over. Well, you could see, right, you could try that every day and see, okay, am I getting better? You know, I start the first week, I have a bad week. I do the second week, I have a bad week. I have a third week, the bad week. If there's no variance in the results over those 3 weeks, you haven't seen any sign of improvement. But the other thing is, did you actually see something with your eyes that says, yes, when these things cross over, I've got an opportunity that I can take, you know, within time to take it. So I can see it within time to take it, right? So some measure of actual improvement is slightly different from seeing something recurring with your own eyes, right? Now, another goal is to have something that doesn't have hundreds of rules or nuances. And I didn't finish that, because the more rules you have, the more time it's going to take you to actually be able to execute those rules. So if you've got 1 rule in your trading system, it's probably not going to work, but you're going to be able to master that 1 rule, right? If you've got 5 rules in your trading system, it's going to take you a little bit longer to master those 5 rules, because you've got 5 things to think about and you've got to get them embedded. Now, if you've got 500 rules in your trading system, it's probably just too much to cover. And that's not like, that's not just me saying something that like, oh, that too many rules is bad, because that's another cliche. It's just your mind couldn't handle too many rules. Unless you're some kind of savant, your mind can't handle too many rules, right? So what we're looking at there, none of those measures are P&L, right? So you can have 0 expectation of profit on day 1, which I know is hard to swallow, but you can also have some goals for a new system as you switch system, because we know a lot of people switch systems, to say, okay, what am I going to look for in this system when I start to trade it? And, you know, we do it with drills, and you can do it with drills. We've got drills obviously in our Order Flow Foundation course that you've probably all got access to, because you're likely all customers. But none of them are P&L based. They're not P&L based measures of improvement. They're just measures of, can I see some actual improvement? I don't have to be profitable yet. Can I see something? Can I see it better now? Right? But even if you do our drills, like the order flow drills we've got, they need to be applied to a larger strategy. There needs to be some kind of strategy, even if it's pullbacks or whatever, to apply those drills to. Then you can build up some financial goals, and your goals should be milestones along the way. Because we said before, the one goal that everybody has is to be profitable. And if your only goal is to be profitable, and you've got no interim goals, then you're consistently in a failed state, right? You are failed. If it's just a black and white, profitable and loss, in profitable or losing, then you are going to be in a continual failed state, And that is going to just eat away at your psyche. And it does eat away at a lot of traders. And that's why we see a lot of people, you know, just jumping out of the markets and just quitting and they've had enough. So how about we think about some of these goals and what they could really mean? So daily goals, making 1,000 a day. How would an average of 1,000 a day work better? Would that work better than trying to make $1,000 every day? And does anybody? Yeah, you've just started doing it, Pete. There's still a problem with it because you've still got to figure out what that average amount of time is, and you know, so you might want to say, well, I want to make $1,000 want to make $1,000 a week, or on average it, or I want to make $1,000 a day, but want to average it over a week. And I would say that would be too short a period to make the average, because you might get to Monday, Tuesday, Wednesday, Thursday, you made $3,000. All of a sudden on Friday, you've now got to make $2,000. So you can have an average amount of money you want to make, but you can't have the average span too short a time frame. Quitting your job for a year with your partner's consent and being at month 10, wondering what all the time went, well, that's a bad idea, right? Unless you've got a starting point, which is a small amount of success. So if you've got a method that is working quite well for you, that would be the time to go to your partner and say, this is like how I'm doing now. I think I've actually got something with merit. And that's the point. You could probably say, right, I'm going to take some time off. And if you've got the ability to have a sabbatical, I know in a lot of European countries, they give you the chance to take a sabbatical. That's the point. But taking a year off when you're at zero, it's just a bad idea, because you're just going to go through this kind of over and over and over and over and over again cycle that people go through. Right. Now, being close to failure or a loss limit on your account, the best way to handle that is reduce your size. Well, first of all, a good thing to do is just take a walk or take a few days off, right? The pressure is really high. What you can do is if you try and hit a home run, right, you might get lucky, right? And there's an argument that says if you are that close, try and hit a home run, because you know you've got so far to go. Now, I don't know if you know how hedge funds work, but the way hedge funds work is they only get paid from the profits they make for you. So if the hedge fund doesn't make profits, they don't get paid. And even worse, if they make a loss, they have to actually make up the loss before they get paid again. So guess what the hedge funds do? What do you think they do? Anybody know? Somebody? Yeah, they close it down and start again. So we're talking about, yeah, they close it down and start again, right? Well, a hedge fund, yeah, there are funds with management fees, and then there are funds where the fund managers get a percentage of the profits, and that's really one of the differences between like a mutual fund with a management fee and a hedge fund. But yeah, they don't get paid. So there are hedge funds that will close down and start again just because they're too far from where they need to be. So let's say your success target is $10,000 and you're now at $50, right? It is just too far. So, but what do you do with that $50? Well, you know what? Swinging for the fences might not be a bad idea, but a better idea is if you're not that far close to your failure limit, is you've got to reduce your size and stick to your plan and just build up slowly. Now, that's especially important if it's your own money, because what you could say, let's say you put $20,000 into an account and it's down to 50, putting another $20,000 in isn't a great idea. I would say you're better off trying to see what you can do with that 50, even if you can only build the 50 into the 100 or 200 or 300, and then say to yourself, right, now I've actually managed to build from that 50. Now I can actually take some of my money and put it into my account again, because I've got my mojo back. But if you hit a home run, certainly if you hit a home run and manage to turn the 50 into a couple of thousand, that really shouldn't have you put in more of your own cash into the account, right? Now, being close to success target, that has additional reward. Again, don't go to pieces trying to get to that last target. I know some of the targets are going to be personal targets, which means you can, you can give yourself a bit of tolerance. You can give yourself like a plus or minus 15%, and say, I'm heading for a target of this much profit, but I'm going to give myself a bit of tolerance in there. So if I've got a profit of turning my $10,000 account into a $20,000 account over a year, if I make it to $19,000, I've still done my job. Don't try to hit the exact number, because it was a made up number at the start. You didn't know at the start of the year what you were going to do, how you were going to react, what kind of opportunities the market's going to give you. Like right now, we're in some extreme volatility. We're in a bearish market. You wouldn't have known about that. So give yourself some tolerance, right? So don't go to pieces. Don't throw your rules away trying to get to that last target. Now, trying to get all days green in a month, well, you can't do that, because once you're on a day where you're on a loser, because it's just a crappy day, the only thing you're going to do is keep digging yourself deeper into a hole. And I've seen so many times people wipe out the whole month in a single day, right? And again, the same for getting a losing day to a winning day. Now, I'd say you have to put that a bit into perspective. So if you're normally hitting like 5 or 6 day trades a day, and your first trade is a loser, I don't think that's a bad thing to try and get yourself out of that position, right? But if your average trades is 6 trades a day and you lose all 6, and then you take another 100 trying to dig yourself out of that hole, then that's definitely you're gonna just be taking back lots and lots of winning days from before, and just give yourself some tolerance. So I think, because it's a catch-22 situation, you can't have no goals, you can't have no targets, but then you can't let the targets mess you up, right? Which is exactly what they're going to do. Now, let's go on. So let's look at the typical trader. We've done this before, what a lot of traders are going on. We've discussed this numerous times. So we learn something, we trade something, and we fail. And again, this is where we come back to that catch-22 situation. What does it mean to you when a trading technique fails? So you guys that have had trading techniques that failed, how did you know? How did you come to that conclusion? Lost accounts. Yeah, that's one way. Lost account. Well, that's a good one, Pete. When the technique had failed to deliver over multiple types of markets, I would say that most techniques will only work in different. Most techniques will work in different market conditions. I don't think there's ever any technique that will work in all. But losing your account doesn't really mean the technique doesn't work. A trading journal is a good way to determine, but I think you have to have, if we go back to some of these things, right? Let's go back to, right? I think it's about having these things. So it's about not seeing any improvement. You don't have to go to the point where you lose your account to find a technique doesn't work. If you can't see any sign of improvement, you can't see with your own eyes that something's recurring, then I think it's time to say, that's when it's failed. So I think you also have to review what you consider to be a failed technique, right? So don't let it fail to the point where it blows up your account. Don't let it fail to the point where you spend 6 months on it. Let it fail to the point where you're not seeing improvement, where it's not building, where you're not building something, or you're not seeing something recur. So like one of the things we do with the order flow is we try and hook people into order flow by giving them drills that says, watch this and look for patterns that recur, right? And it's that you need to do. So even as you take order flow back to, if you're using chart, I mean, there's nothing wrong with using charts, right? I'm absolutely not against people using charts. In fact, I use swing charts myself because I think they're a great way to see the swings in the markets. But when you bring back these things together, bring your order flow back into your charting techniques, you need to know, you need to be able to see some patterns recurring in the charts as well as the order flow, right? So I think one of the things that we do is we get into this failed state, partly because we let the rules go out of the window, and partly because we don't look for these milestones on the way. We look for profit and loss, right? And you can set the milestones yourselves. Like, right, at week 3 of a new technique, I should be seeing something recur, right? And if I don't see something recur, I'm gonna really examine, see if I'm doing the right thing, if I'm following the rules. But if I don't see something recur, I think it's time to give up, right? By 3 weeks, you should see something recur, right? Or 3 weeks or 4 weeks or whatever you decide to do. What you don't need to do is put $200,000 into account, trade it for 2 years and lose 200K, right? There has to be. And some people are saying they're unable to stop. Being unable to stop is a bit of a different thing. That's more of like a psychological thing. This isn't really about the psychology of trading. This is about, how can I really assess if this technique is failing? And it's having milestones and saying, and giving this technique, right, you're my new technique. You've got to show me within this much time, you've got to show me this. You've got to show me recurrence. And you've got to show me recurrence maybe in time for me to do something about it, right? So there's one thing seeing a pattern, but if you see the pattern and you've got like 3 milliseconds to react, or you can only see the pattern after the event, then it's not a pattern that you can react to. But your reaction might be a bit slow at first, right? So the fact that you can see the pattern, but you're late on the button, that doesn't mean the thing's failing, right? Your trading won't be doing well. You won't be making a profit, but you can set yourself some milestones and some goals that says, okay, when I use this, I really want to see A, B, C, D. And for me, it's recurrence and being able to see things with my own eyes, having very few rules. Now, we've gone through this slide before, because if you are going to switch, these are the main techniques that I've seen people repeat at home. None of this, we don't teach all of this, and we can't teach all of this because that'd be like me saying I know every technique in the market, which would be nonsense, right? But outright positions, buy to sell higher, sell to buy lower based on X. That's what most people are doing. Now, at the moment, you can get in some really good momentum trades. I mean, if you look today, there's some times when some really big size came into the market and it just took off. And so buying to sell higher doesn't mean buying the low of the day and selling the high of the day. It could just mean I'm getting in some momentum moves. Now, if you're going to get into momentum moves, what do you need to see? Well, you need to decide what your signal is for momentum. So let's say your signal for momentum is, I want to be able to see, I'm going to see some size come into the market. And I don't mean on the depth of market. I mean, some actual trading size come into the market. And then I'm going to get in when I see that. So if I see the market going down, I might see size on both sides, but the market's hitting down. That is momentum, right? I might start seeing like 10s and 80s and 50s, and the market's going up and down. But then I see some 500s, even if it's 500 aside and it goes down, and then another 500 aside, and it goes down, another 500 aside, it goes down. That's something you can see, and then you short that. And I'm not saying you should use this as a technique. And then you short that, right? And you try and figure out where your targets are going to be. Right. Now, if you started to do that, you could start to do that and give that 3 or 4 weeks. So first of all, am I seeing it often enough? Am I seeing it in time? Whether you're getting into that market in time, different matter completely, right? Seeing it in time and getting a profit from it, 2 completely different things, right? Then we got spreads. We don't do spreads here. There's different kinds of spreads. Equities event trading. I know a lot of people that do this. There's news that comes out. There's a site called briefing.com. It's a really good site. It gives you a lot of news before the market that helps you understand what markets are going to be in play on that day. And it gives that from a very wide range of instruments. To me, I found that very difficult. And the reason I found that very difficult is that you would start the day looking at briefing.com. You might have a short list of 15, 20 stocks that you're looking for some action in that day. But because most of the news, because of the rules of the stock market, is the news has to come out before the market opens, a lot of the move happens in the pre-market. So there's like a pre-market session that you can get access to. It's mostly professionals in the pre-market. You can access it, but you just need the right kind of account. So I can access the pre-market with my interactive brokerage account. Other accounts won't let you. They say it's too, it's too difficult, or it's not for beginners, But quite often that's where the market action is. And so you get the news, you put the stock on your screen, and then you find out the market opens and it's all moved already. And then you start looking at scanners and all these other things to try and find out which markets are moving. And a lot of the scanners tell you too late. Now, futures event trading is much simpler, right? It is much, much simpler. So if you're looking at equities event trading, there are thousands of companies reporting every quarter. So every quarter there's an earnings period, and there's earnings released before the market opens and after the market opens. They are not allowed to release earnings while the market is open for kind of obvious reasons, because people would be able to take advantage of it, right? Like the people who are about to release the earnings. With futures events, people think futures events, macro events, require some kind of degree in economics, but macro events like Saudi oil attacks, I mean, that was 3 or 4 years ago now, Brexit, COVID, they generate momentum. What have we got on now? We've got COVID, we've got the Russian thing, we've got OPEC. I mean, OPEC today said that they think demand for oil is going down. So you've got the Russian pipelines being shut off to Europe. You've got OPEC reducing production, and OPEC saying that demand's going to go down. And I don't know how they figure that out, because there's less oil for everybody. Prices are definitely going to go up, but OPEC saying demand's going to go down. So that kind of thing, OPEC saying demand's going to go down, and that big picture of, what's going on in Russia, that isn't hard to listen out for on the news. So when that pipeline got cut off in Russia, everybody knew oil was going up. And those are actually much simpler events to trade, right? But if you don't want to trade those events and you don't want to trade the news, because some news is scheduled, as you know, some is not scheduled, some is on, like I've recommended Reuters newsletters before for you to get like semi-scheduled events. And then some news does come out as it happens, like breaking news, especially news on wars and stuff like that. So there seems to be, you've really got less restrictions on news when it comes to futures markets than you have with equities markets. With equities markets, they're not allowed to come out with news during the day. They're not supposed to come out with news during the day when the markets are open. There's a lot of blocks on that. But with futures, the markets are open 24 hours and you don't have the same kind of restrictions. So if a pipeline gets bombed, that's going to hit the wires straight away, right? And it's going to give you a lot of momentum, right? We've already talked about momentum trading. We're looking at people's stops, looking at risk reward entries, where the market appears to be set to pop, like breakouts, recurring order book patterns, lackluster patterns, where certainly markets like today, where it just seems to run out of steam. We've got the move, it's the opposite of what we talked about before, where you see the 500s, and it goes down, it goes down, it goes down, and you've seen a lot of volume, and then it just stops. And quite often that's the end of that move, and that's when it starts to whip back. So that's more technical trading, and there's a lot of ways to do that. And there's a lot of, even on if you go to the Jigsaw website, Jigsaw YouTube page, there's a lot of methods described on that. We're actually adding some playlists at the moment so that we can segment now trading techniques, order flow techniques on the different playlists on the YouTube channel. And then the scalping. But like I say, we don't teach all of these, nor can we, but these are really the main things that people are trading at home, right? Now, your technical trade could involve indicators. And if you find indicators that are working for you and that you can see in time, then stick with them. But the thing is, have those milestones in the middle, right? So any questions on that so far? Question? No, good. Right. So if you've got questions, you can type them in. So now, what is it that we do with group therapy? And so we can do, we've all come through COVID kind of scathed. I mean, is there anybody here that put weight on and got depressed during COVID? Somebody lost 70 pounds. Good Lord. Well, are there any of you that are still kind of suffering from a bit of a depression or a bit of a feeling down? Because one of the things, no, I enjoyed it. My wife, my wife cooks it very well too. So, one of the things we need to do is kind of shake that. Got into better shape. I got into much worse shape because they shut the gym and it was 40 degrees outside. So I stopped running. Fortunately, losing it now. What are your guys' ideas? What are your guys' ideas? Oh, you're in Florida. Well, that's fantastic. We still have masks on. We still have masks on most places in Thailand. So here in Thailand, all of the Asian people seem to have masks on. And 90% of the Western people are not wearing masks. And man, you get like stink eye. Every time you go out, you go to a shopping center, like everybody's looking at you with stink eye. Like, and, even there's politicians that are saying, the dirty foreigners are not wearing masks, but the Thai people are still wearing masks. But yeah, it's everywhere still here. And there's a few places locally that aren't wearing masks, but in Bangkok, it's mask city. So what do we do with group therapy? So let me throw some ideas out there. Should we focus? Yeah, I lost one friend. That is tough, having lost somebody from COVID. I lost one friend from COVID. Yeah, I hate flying with a mask. Don't fly Lufthansa if you're gonna fly. But again, back to it, we can do group therapy, but we need to break the, we're now in the post-COVID world. I've got my mojo back. What do we think we should do with group therapy? How do you think it should be structured? We can pick somebody apart every week, every month. We could get you to write in topics to talk about. We could bring in other successful traders. What are your thoughts on what you'd prefer to see in group therapies? And then let me just give a caveat to that. There's the format will have to stay the same, right? And when I say the format will have to stay the same, it has to be a little bit less preachy and a little bit more interactive. So people want to see successful traders. Yeah, every 2 weeks. I think, well, I still like once a month. Lex, it would be good to watch me trade live for 1 hour a month. But if there's no trades in that 1 hour, it might be a bit dull. Although we could sit there and watch the order flow. Which strategies work and which strategies don't. Okay, so let me make some notes here. Nature of the markets. What works and what doesn't, that's going to be it'll be like a football match in England, because people are very opinionated on what works and what doesn't. I'm a bit softer on what doesn't work now, because I've seen some things that I thought were nonsense that people had success with. So the nature of the markets, traders' journeys. Good and bad traders. Now, I like that. Who likes the idea of bringing in a bad trader to hear their story? And hopefully we give them some advice in the meantime. Okay. We could do some sessions on the tools. How about that? Would you be interested? Would people be interested in sessions on the tools as well? Because like John Creedon needs to do the next one. John, can you reach out to me? If one of you guys, so let me just put, I don't know if you've got my email here. Let me put it in. So. Okay. Peter Davis at jigsawtraining.com. If any of you want to share your story and do a group therapy and you're willing to answer the questions that people ask, drop me a line. Because I do think some of the failures that people go through would help people that haven't gone through those problems yet. Learning the tools wasn't something I'd considered, to be honest, although it does make a lot of sense, because there's so many like small options that you might not be aware of, and that's one of the reasons that Fernando's doing those videos, those featuring focus videos. And some, okay, fair enough. Still want to see some demonstration on using DOM. How about if we now I don't like to cherry pick, but how about if we walk you through like events on the DOM so you can better see what you're supposed to be looking for? Would you appreciate that as well? Okay, some walkthroughs. Okay. Yeah, it's all about trader development. But the thing is, we don't want to, like, I'm really scared to say to people, you need something new every month to be profitable, right? But yeah, I agree, because maybe we can start to pull through some scenarios with you on the DOM that you might not be seeing at the moment, because there is some really good action going on right now with size coming into the market, and that would be a good thing to see. And how do you reconcile taking stop losses? I just cry a little bit, but how to take a stop? Now, I think something like that, how to take a stop. If we did a session on that, it would be good to have somebody who's been through that kind of process of not being able to take a stop and then being able to. I know that John Grady has got a really good answer for that. And his answer for that is put a certain amount of money away that you want to lose and try to lose it by taking your stop, try to lose that money by applying your stop rules rigidly. Right. And what quite often happens is then that money doesn't get lost. Okay, so I've got quite a few ideas. If you've got ideas for what you want to do in group therapies, you've got my email address there. Did everybody see my email address? Right. So it's peterdavis@jigsawtraining.com. It's not that hard to get hold of me anyway. So what I'd like to do, if you can, I've got some ideas down here that I've written down. If you want to email me ideas, or if you want to email me, if you want to volunteer, I've already got some traders lined up that I'd like to bring on that are very interesting people. And so we'll make it so that it's not trying to lecture something to you each time, but we will bring in some educational components. What setups do you like personally the most? I can give you, let me just 7 trading. There's actually a video on that setups. Jigsaw trading. Let me just find this. Right. Right. This is a webinar we did for Futures.io. Let me just pull this up. So if you want to know what my favorite setups are, this is it. And you'd be surprised. So can you just see that screen on the Futures.io webinar? Yeah. Have a look at that. Stephen Lee knows that one. Have a look at that. If you want to know what my favorite trading setups are, that's where they are. So I'll copy the link into the chat. Okay. And please do email me either your volunteering or your ideas, and have a look at that video. It's not very, it might seem they're not very complex setups, and that is probably why they're more effective. At the moment, I'd be more inclined to not be trading those on the S&P, right? Look at crude or gold or something that's actually not going so haywire as the S&P at the moment. And with that, I think we're at the hour. I think we've done what we set out to achieve today. Does anybody have any questions before we sign off? Okay, we got some thank yous, no questions. That's good. That's good. No, it's not just you. No, it's not just you not liking the S&P anymore. Right. So thanks for that. What I'll do is I'll put the recording up tomorrow, or I might actually work on it tonight. But I'll put the recording up today or tomorrow. It'll be on the blog, and I'll send out an email. And thank you all for coming. And I look forward to getting your emails again. You'll see the session if you look on blog.jigsawtrading.com. You'll see it on there. But I'll also send out an email. And thank you. And thank you for your support as well, Leslie. And with that, I will stop the webinar now. I know you're all typing in your thank yous, but I'll stop the share now. And thank you all for listening. And I'll see you at the next group therapy.